Hey everyone, Apple reported third quarter earnings results that were somewhat disappointing. I'm going to explain why in this video here. I'm also going to update my recommendation on Apple stock. Coming into the quarter, I had Apple stock rated as a buy. Going out of the quarter, you're going to want to tune in to see if I'm changing that recommendation. Tune in, I've got a lot to cover here. Let's get started with revenue, which decreased to 81.8 billion, down from 83 billion in the third quarter last year. That's a typo there. It should say Q3. Earnings per share increased to $1.26. That was up from $1.20 year over year. Services revenue, which is a key for which is a key for Apple, and I'm going to explain why it's a key for Apple in the slide after this one, so tune in for that. But that increased to 21.2 billion from 19.6 billion. That was solid. iPhone revenue, however, fell by 1 billion to 39.7 billion in the quarter compared to the same quarter last year. And perhaps most discouragingly, cash flow from operations in the 9 months ended on July 1st fell to 89 billion from 98 billion. I know it might seem surprising to say a company that's generated 90 billion in cash flow from operations is a little bit disappointing, but it is when it's down almost 10 billion from the same time the year before. So Apple is struggling with some headwinds here that's causing revenue and cash flow to decrease here. And let's dig a little bit deeper into what's going on and what's causing these declines. So I've got two things broken out here. Let's start with the top with net sales by reportable segment, and it's got Apple's geographies here: Americas, Europe, Greater China, Japan, and rest of Asia Pacific. You can see here Americas is surprisingly the segment that's struggling. Total revenue net sales in the Americas was down by more than 2 billion. So from 37.4 billion in the same quarter the prior year, it fell to 35.38 billion this year. So sales coming down in the Americas. The good news is that Greater China is finally recovering for Apple. This is a segment that's been troubled for Apple ever since the COVID lockdowns. Good to see revenue rebounding in this geography here. Now, coming down here by product, we could see iPhone revenue falling from 40.6 billion down to 39.6 billion year over year. Now, Apple and the iPhone, it means a lot more to Apple than the figures that you see here, because when people buy an iPhone, what else are they probably going to buy? They're probably going to buy maybe the AirPods. They might buy, they might subscribe to Apple Music. They might buy Apple Care. They'll probably use the search feature on the phone, which Apple generates substantial service revenue from. So several segments of the business rely on people purchasing the Apple iPhone. That's really the gateway product into Apple's ecosystem. And so when iPhone sales fall by a billion, it means a lot more than just the $1 billion decrease in revenue. It means the other parts of its business are not going to do as well over the next few quarters as they would have if Apple had sold more iPhones, because then following, people will download apps, they'll buy services, they'll spend money on the iPhone, which then Apple will generate services revenue from, which is a much more important segment than it looks on the surface. And let me explain why. So services revenue increased from 19.6 billion to 21.2 billion. Services revenue is more than twice as profitable gross profit margin compared to hardware. Apple's hardware revenue comes in anywhere from in the mid 30%, let's say, from 34 to 36, 37% is their hardware gross profit margin in a typical quarter. While the services segment exceeds 70%, sometimes 71%, in that range is where Apple's services gross profit margin is. And so you could see that it's more profitable when Apple generates services revenue, because it comes with a twice as great gross profit margin for the company. So this last few years, as Apple has built out its services segment, it's helped Apple's profits and cash flow considerably since it's more profitable. Another thing I wanted to note here is the Mac. Mac revenue fell to 6.8 billion, down from 7.38 billion. A couple of things going on here. Number one, last year was when they made that big upgrade to the M1 chips for the computers. That created a big boost. So this year it was a difficult comparison because they just did an incremental upgrade to the M2 compared to the M1. But also, computer sales, personal computer sales industry wide are down significantly this year. In the first quarter, they were down by almost 30%. In the second quarter, they were down by roughly 16, 17, 18%. So for the Mac to only have the revenue decrease by roughly 500 million from 7.38 billion was actually an impressive quarter for Apple here in the Mac segment, in the personal computer segment. So good job from Apple there. That was a bright spot, in my opinion, in an overall, I would say, disappointing quarter from Apple. So to update my recommendation of Apple stock, I'm going to downgrade Apple stock to the borderline. I had the stock rated as a buy coming into the quarter. I'm going to bring it down to a hold slash buy because the valuation was already getting expensive. And so when you couple the most expensive valuation Apple has had on a forward price to earnings basis in the last 15 months or so, when you couple that expensive valuation with a mediocre earnings report with revenue declines and cash flow from operations declines, that warrants a downgrade for me. I'm bringing it down to a hold slash buy. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.